I think talking about cities is always fun, and you almost have to like frame specifically what we're talking about, because when you're talking about metrics of whether a city is working and sustainable or not, if there's 10 million people who live in the city, that's 10 million opinions on whether it's sustainable or not. So just for starters, like, what are the metrics we're talking about here? Break sustainability in cities down for us to the things that are projects or businesses that are investable.
Looks like I'll go
Passing the buck. A bucket brigade.
Throw yourself on that one.
I mean, all cities have buildings. Cities are generally responsible in the 10 million population range of 400 or 500 cities, buildings. And therefore, you have an amazing opportunity to look at that holistically, improve the data capture that you have within those buildings. All big cities have a grid that has to respond to ever-changing dynamics of energy put on the grid. So increasing amounts of renewables, but also decreasing amounts of base fuels. And then probably the other big factor is mobility and transport. And this is the other, the one that captures everyone's imagination. Somebody once told me that rage is cumulative, which I always thought was a lovely expression. So if you get stuck in traffic and then on your next trip your train gets delayed, and then your third trip you step in a pothole, you're just about ready to quit the city. So cities are very, very delicate places for investors to think about putting their money in.
Sure. Dovetailing off of that, first of all, thanks for the kind invite to be here, and also thanks for the reminder off stage to take my tie off before the panel, which has a somewhat renegade
do you mind putting it back on?
Oh, I'll be right back. Right. But thinking about what you were just saying, which is absolutely true, you also have to think about the S within ESG as well. And what cities really bring out is that those are intertwined in these situations. Not a complete overlap in the Venn diagram, but if you think about who is getting healthy meals, who is getting reliable access to electricity, who is getting reliable access to clean water and sanitation, those are all things that operate at the intersection of both environmental considerations and therefore environmental metrics, such as addressing carbon emissions and tracking that, and the conversion towards more of a clean economy and clean infrastructure system. But also then, what is this actually doing in terms of the impact in every individual within that city's day-to-day lives? And the other thing to bear in mind as well is there, therefore, is a pretty wide spread of what people care about within that context, right? What is important to a citizen in London, here in New York, may be very different from what is important to a citizen living in, name your other country, name your other city around the world, in terms of their day-to-day impactful, experience. I would argue it's all very much the same underlying set of needs, but in terms of where it actually hits them personally is different. And so how you track these things may very well differ by situation.
Yeah, and I already mentioned a few of the factors that we look at in terms of air quality, climate change vulnerability, and provision of renewable energy. But some of the other things that we look at, which sort of sit in some of our other megatrend buckets, are things such as the strength of governance of the local institutions, provision of education, quality of healthcare, and also the proportion of women who are engaged in the economy, which is a really good indicator of economic strength, but also social sustainability.
Which cities come out on top on that metric? And also, I wonder how specific you want to get in terms of which cities really are showing signs of being sustainable, and maybe define that. But first, Abby, like not off the hook. Are there cities that come to mind?
I mean, there is. Well, interesting. I've got some examples of on the more sustainability environmental side of things, where we see in the US, for example, pretty obvious, but Miami is one of the ones that gives us greatest pause for concern when we look at climate change vulnerability. Some of the Californian cities in terms of wildfire risk, but then cities like Seattle and some of those in the more northwest, which are much better protected. Generally speaking, European cities tend to be about a third at risk of climate change vulnerability than Asia Pacific, and about half as US. And some of the reasons for that is that the US and Asia Pacific has a lot of coastal cities. Coastal cities obviously very vulnerable to coastal flooding, and also more vulnerable to severe storms. Whereas in Europe we see much more vulnerability to extreme temperature changes. In terms of the engagement of women in the workforce, generally speaking, Europe and US perform well. We see in the APAC region a significant variation in that, but real growing examples of that.
I'm going to go on a little bit of a tangent to answer, so you go first.
It's your hope.
I think those cities now that are beginning to connect their infrastructure to really think about how the data interacts between different infrastructures across the city are the ones that are beginning to lead the way. They're the ones that will be more competitive. They'll be able to manage those systems more effectively. I mean, historically, nearly all cities are very wasteful. So by connecting your grid data to your buildings data, you can completely optimize the way you run your buildings, running the grid. Singapore's a good example. London, obviously. I have to say nice that. Work. I'm sorry, I'm sitting in New York, so New York's also another good example. That's just so I don't get run off stage. So, But the big cities generally do well because they are analyzing this data either efficiently or inefficiently, but they're at least looking at that data properly. Los Angeles is actually beginning to do some quite interesting things through good cooperation. San Francisco, Chicago. So lots of big cities are making the move, but I think the connectivity of the different infrastructures is key. Taking the bold step to doing smart city projects is also key, building IoT solutions that improve the air quality in your local neighborhood, around your local school, or just give people some advance warning that you're going to have a bad air day and give the city a chance to do something about it or make an action that's going to make things a little bit better. So there's some of the things. I've given you a few examples of good cities.
No, thank you. I'm curious, like, if humans increasingly, literally over the last 25 years, I think there's 40 megacities above 10 million today than there were in 1990. So if we're a species that lives in cities, then like, is there a difference between investing in cities? And if there is, like, what's the difference?
Well, so speaking of what you were talking about as well, which is the connectivity of the infrastructure, I think there is a difference, because one of the major drivers here is what is the existing infrastructure, what is being outgrown or outdated in terms of the existing infrastructure, and a lot of that becomes very acute in an urban environment in particular, and in specific cities, case by case. Look, our team invests into these distributed infrastructure systems in energy, food, water, and waste. And we came at that because our team was originally part of a syndicate of family office investors that was at the cutting edge of investing into a lot of these solutions. And we came to realize, a group called the CREO Syndicate, C-R-E-O, they're based here in New York. And we came to realize that a lot of the emerging solutions for the unmet needs in both urban and rural and all other environments were these smaller scale distributed connected environments. And it was the advancements in automation and IT and telecommunications that were really allowing for a lot of, instead of having to have one big centralized wastewater treatment plant, you could now have a bunch of containerized, smaller, more automated, remotely monitored wastewater treatment systems. And that really lends itself to when you get in an urban environment where the infrastructure is not as well kept up, or where it may not even exist in the first place. And that's not just about a sheer availability, it may be the quality of the availability. I was just looking at a study, for instance, out of Indonesia, where they did a survey within 3 major cities within Indonesia, and found that while everybody had access to electricity on a fairly reliable basis, if you look at available, like World Bank data. It's like well over 90% of people in urban settings across the world have access to electricity. For these folks in these cities, they were experiencing it at a low enough level of quality and reliability that some major portion, it's ranged in the cities between like 18% to 60% of people had gone ahead and invested into backup power generation. And what that netted out to was that they were willing to pay like an average of 2 cents more per kilowatt hour for their overall electricity spend, just to try to get that reliability. That may be less of an issue in some other cities, right? In which case you're going after some different considerations. Although I would argue reliability is starting to become a more acute question here in many U.S. cities too.
Agreed.
Yeah, just one add-on to Rob's point. One of the big trends we're seeing is a big increase in electrification of mobility, cars, buses. We're beginning to see it across the whole spectrum. You know, airports and ports are now increasingly electrifying their operations for many reasons, for the reliability reasons, but also for saving money, improving performance, for improving air quality. So all these other co-benefits that you know, add to the investment criteria that just really makes sense to do it. We did a modeling in Los Angeles that if they achieve their 100% renewable target by 2050, but they electrify all of their vehicles, they're going to need 192,000 charging stations. And if you get your iPhone out, I'll let you do the calculation, but that's 120 charging stations per week that need to be built for the next 32 years. It's an incredible increase. So the amount of energy we're going to consume is going to go up tenfold. It's not going down. So we're going to have a lot more energy going into the grid. So this trend in microgrids and off-grid solutions is definitely going to just keep going up and up and up. We're going to have island sites just for resilience purposes, but we're going to have to do it just to keep pace with the change that we're seeing in this kind of trend of electrification.
I think the batteries, though, in electric vehicles provide a really interesting opportunity to manage demand for electricity. Right. So at the moment, we have really problems with peak demand, and that's what really drives up the cost of electricity. But by providing a whole city's worth of batteries, you essentially have a power station sitting within your city, and you can really manage that demand. If you have an office building which has a car park full of electric vehicles, then they can moderate the times when those vehicles are giving back into the building and then drawing energy from the building. And this is the kind of smart kind of powering solutions which are going to become absolutely essential in the future to manage that increased demand for electricity.
But there's one major challenge from the perspective of scaling up all of these kind of solutions, because so many of these solutions, by their very nature, are necessarily smaller scale. And the world knows how to finance and develop and construct a singular big power plant, right? That's something we've done for decades. What happens when it is this series of smaller cookie cutter, much less expensive systems? The headache, the transaction cost of raising $5 million worth of project equity is the same as raising $500 million worth of project equity. But one of them is much more scalable, right? So that's where there is a remaining major challenge to be solved by the financial markets. I would argue it's been somewhat solved in one particular area, solar. And so that provides a recipe that we and others are following for figuring out how to roll out these kinds of solutions at scale. But there's also a lot that needs to be done then operationally in terms of standardization, in terms of thinking about it from an operational standpoint. How are we going to apply that same sort of thinking in terms of scalability on the financial side to be able to roll out exactly these kind of solutions at the scale that you're talking about? Because there's no way that you could succeed at that level of rolling out charging stations if it's one batch of 10 charge point stations at a time.
Right.
Is there, ROI is the wrong term here, but is there something like that where that sort of connotes a city's investability, like, oh, you got to get in Chicago, like, how do you gauge numerically the opportunities present in the city? Maybe it's more like the, like the World Bank, ease of doing business. Does any of this make sense? You're staring at me like I should come up with another question.
And we have a scoring mechanism for cities, which takes all of those different megatrend factors together, lays them across scale and growth opportunity, and comes up with that rating. But then that is different region per region. So we might have quite a large base of European cities because they tend to have a smaller population, a much smaller bank of cities in Asia Pacific. But we do have quite a regimented scoring approach for cities.
But that's proprietary, it's your own thing?
It is, yeah.
There's a transparency index which also helps people understand how stable these investments are. And again, it depends on how much a local government is willing to underwrite on some of this risk. Historically, they're risk averse. I think they need to become more involved in the decision-making process of how these investments happen in order to control the externalities which private sector businesses are taking away from them. So, Uber's a good example. They're saving people money. They're giving people a convenient trip somewhere.
Right, and we learned earlier that there's now Uber for vegetables.
Oh, well, even better for somebody. But they never asked permission to come. Right. They just came, and they don't necessarily care about air quality. Well, they might care, but they're not necessarily focused on it like a city would be. So there's definitely a role going forward of framing these investments in a way that allows the city to put these externalities that they do care about front and center of these investments.
We're happy to take questions from the audience. Meg, have you?
I have a couple, yeah.
Okay, great.
And I'm Meg Zabo, just introducing myself. I'm standing in for Lawrence, and she's moderating the next session. So I'll be doing the next 2 sessions. I work on a sustainable business team as well. So the first question is for you, Martin. Do you feel reducing water usage in buildings is keeping up with reducing power usage?
What a great question. Rob?
Turnabout's fair play. Turnabout's fair play.
I'll go first. I think historically water consumption's always been easier to control because it's very visible. What we're seeing now with energy is we're being able to see how we consume energy across not just one building, but hundreds of buildings, and also doing all of that remotely, so we can compare good and bad practices, across whole swathes of building stock. But I think both need to come down significantly. So, just in domestic water use, the US consumes 280 litres per person per day, and the Code for Sustainable Homes calls for 80 litres. So we've got a long way to go to figure out how we really, really reduce consumption further. And again, I think good data on good practices needs to be shared more widely. How's that?
That was great. But it's funny, there's the framing here. You guys are such strong macro sort of thinkers, at least macro at the city level. And where we end up investing, it's in a particular set of projects for a particular solution. And honestly, we don't even think about it in terms of like, that's the city we want to be investing in, right? It's more like that's the solution we need to be investing in, which cities need it the most. Thinking about it from a water perspective, one of the things that we keep running across, and this is a big issue increasingly, in many cities, no matter what their economic, sort of situation, is water quality. And we've seen such striking examples of that here in the United States, not just the high-profile example of Flint, but recent studies have shown that there's really, not very good water quality in a lot of areas of the United States, and a lot of those are urban environments. So what are cities going to do about that? Well, the challenge is, a lot of what could be done with that is a smaller distributed solution. If you look at cities like Singapore, they have a whole system that they've rolled out around capturing rainwater runoff off of buildings and putting it to good use, so that then they can deploy their drinking water solutions more cost effectively, more targeted to drinking water. And I know of many companies that have solutions that could then take that rainwater that could be harvested, captured in places like Philadelphia that are doing a lot of work around runoff water and capturing it and the like, and turn it into drinking quality water. I'm sure some of you have seen the videos recently of Bill Gates happily enjoying water that had come straight from sewage but then been treated to drinking water quality. And all of these things are feasible. It requires a change of thinking, however, but it also really requires a change of business model for these solutions, because we are so mired in this central hub and spoke utility-driven model for all of these types of really basic services, that how is somebody like a Water Health International, a company that is rolling out smaller scale sort of water utility for a small set of homes and businesses in a box, how can we port that kind of business model to a North American or European urban setting and have that be successful within the construct of the market that is currently dominated by a local water utility? That's still a tough nut to crack.
What are your thoughts on cities in some of the developing countries in Africa?
Yeah, I mean, we are not there yet in terms of investing into some of those cities, and I think there's a whole host of challenges in terms of their governance and vulnerability to different risks. So not yet for us, but
Western investors, particularly in African nations, are Western investors in competition with Chinese investors there?
I haven't seen it at the level of the type of system I'm talking about, the smaller distributed system. And in fact, I'm seeing a proliferation of a lot of these solutions providers. Funnily enough, it seems to be on a country by country level basis. But platforms that are providing shared electrical services through a number of different models. It could be, somebody in a neighborhood has a bank of solar panels and is charging them up to batteries and is then leasing the batteries. I've seen full-fledged, sort of neighborhood-level microgrids where everything is actually wired and connected, and then, there's a variety of different solutions that people have applied. Certainly, there's every setting from small urban to large urban that you have to worry about in these settings as well. But what I'm seeing is actually a lot of interest among the family office community, the institutional investor community, in investing into these kind of things. One of the interesting moments I had about a year ago is I got invited, because of our family office background, to participate in a closed-door setting among a bunch of pension plans that were there basically just to talk about how do they collaborate with each other. And to be very clear, this was not a sustainability conference, this was not even a sustainability meeting or anything like that. This was just, hey, how can we figure out how to collaborate with each other to make more returns? And the one thing that kept striking me is all of these pension plans within that closed-door setting where they had no PR reason for doing it, the question that kept coming up was, hey, how do we invest more into emerging market solar? Because there's the sense of the opportunity there. We just need the investment and match to that the business models to be able to unlock that.
So just some of the bigger cities in Africa, Johannesburg, Cape Town, Addis, they're all conducting greenhouse gas inventories through the help of C40 cities and other city groups. And I think this is an important first step to attract that kind of investment. Without the understanding and knowledge of exactly what the growth looks like in those cities and the trajectory of their greenhouse gas emissions, there's just no chance that they're going to attract the investment. So all the big cities are beginning to do that, which is very encouraging.
Abigail, what is your rating for New York City?
So New York is quite exposed to climate change. Coastal flooding, obviously, severe storm as well is a real risk. However, the city invests quite heavily in defences, and the rating that we apply incorporates that. So it actually scores slightly better than you would think. And then what we really need to do for New York is look in a more kind of in a more micro basis on specific areas. There are certain areas that are much more risky than others. Air quality, it's at the bottom end for the US, but the US in general does better on air quality than other regions we invest in, because it never went down the diesel route for cars, so it's not as polluted as some of the other cities that we invest in. And then grid carbon, it's pretty good actually. It comes out much better than some of the other parts of the US. So overall, New York does middling to well, with scope for improvement, which I'm sure it will do.
How much higher is London?
Different set of challenges with London.
It fell off since you left office. In our last minute, I want to ask about, 2 weeks ago, the United States published its fourth National Climate Assessment, second volume, which comes right out and says, the climate we're in right now and the one that's coming is not the one that everything was built in. And while that can be kind of intimidating, factoid, what is that? Yeah, I mean, that report specifically, but like, what does this do for the business of cities? Like, as risk goes through the roof, are opportunities commensurate with it, and is investment commensurate with opportunity?
Resiliency. So resiliency has always been an issue. Resiliency is going to become a much more acute issue. I like to say we're not entering a period of global warming, we're actually entering a period of global weirding, right? The extremes are going to become more extreme, the storms are going to get worse, the damages are going to get worse when something happens. So what does that mean? That means that if you are, a city like New York, you have to start thinking, as many, parts of New York have started to think, about what happens when the next Superstorm Sandy hits, and how do we create the kind of reliability and resiliency to our systems, not just electrical systems, so that we can continue to be viable. And we are incredibly fragile to that. If you look at any of the studies that talk about how quickly the shelves would empty out in my town of Boston in any kind of major economic disruption, because so much of our food is trucked from out of the region, we are vulnerable to any number of different types of disasters, to any number of different types of events, to any number of different, whether it's water or energy or food and the like. A lot of the answer to that is going to be the smaller scale solutions, and it turns out that over the past few decades, a lot of those solutions have been successfully commercialized, but they haven't been rolled out even where they make compelling economic sense. If we can figure out how to take the trillions of dollars that are sitting here in this city, in your old city, right, just waiting to be unlocked, and they want to be shown how to be put to work rolling out these kind of solutions, that can be done so that it will enhance reliability and resiliency, but nobody has yet done a really good job of figuring out how to get paid for that resiliency yet, and that's key.
One point I would add to that is I think that for developed cities, we can innovate to adapt and be resilient to a certain extent. And we see examples of that all the time. Thames Barrier, a large part of the Miami Brickell area is very resilient to the water coming in on a regular basis. Widespread changes that were made to New York after Sandy. But I think once we get beyond 2 degrees of warming, that ability starts to very rapidly drop off. So it's important to focus on resilience and what we can do to protect our cities. And we're going to have to make very significant changes to our cities in the coming years, but we have to make sure that we're equally as focused on curbing carbon emissions, because if we don't do that, then we're fighting a losing battle.
And the quick last word.
I think if we connect our infrastructure together and analyze that data properly, it will improve resilience, it'll make our cities safer, cleaner, just better for the future. And ultimately, I think you started with it, cities are for citizens. We live in these cities, most of us do, and we want to fix these things incrementally every day if we can. And the way to start is just connect our data sets together and see what we can do with them.
Great. Thank you so much.
Great. Thank you.